everyone. I'm Jen. Thank you so much for joining us on another episode of Blockchain Banter Trading Crypto. I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Banter and Carbon DeFi. Thank you guys, as always, so much for joining me. Thank you to our audience as well. I titled this one Bitcoin's Next Move, but as much as I want to look into that and kind of revisit some of the things that we might have pointed out in some previous episodes, I also want to have a look at some alts. I don't know if there are any specific alts that you guys are looking at, or anyone who may be tuning in, if there are alts that you would want us to look at. But please comment if there are. Otherwise, Keith, Mark, I know we were all kind of saying we were watching to see if it was going to break through that 73. I think, Keith, you were really looking at that 69 level as that sort of key marker for you, right? We had seen that go through. Mark, you and I saw that big billboard all of a sudden flashing in Thailand when we were there. And I think since then, I've seen these live streams, these ongoing live streams of Bitcoin to 100,000, and we got close, right? But we're seeing a pullback right now. What are you guys? Go ahead.
I think it touched 100K. I don't think we came
close. Did it touch?
I think we actually had a touchdown on there. I'll let Keith be the judge of it, but that's what I had.
Maybe on some exchanges. I don't know. What I've seen, highest I've seen is 99.8. That's close enough to the pin for me, right? And I don't think we're done, but we've been saying that we need a pullback. This move has been a turbocharged rocket launch, and there just has been very little structure in the chart. So we need these pullbacks. We need support tests. We need consolidations to build some strength, not just for this move, but listen, at some point in time, whether it happens, whether it's just a mid-cycle correction or whether it's at the end of the bull market and into the bear, price will come back down, and we need to have landing zones. Every rocket, especially in the Elon Musk era, every rocket needs a place to land. And so when we get these pullbacks, we start to get some foundational support in the structure, and that is super, super important.
So is this what we're seeing now? Do we see 93 as one of those? I think we're 93 something.
Well,
right?
I can show you what I have had, what I drew on my chart a couple days ago, and now it is developing. So let me share the chart.
And Raj, by the way, here said yes. Said the same thing that you did. 99.8. Mm-hmm. So,
all right.
So the same thing you did.
I got 99 problems and Bitcoin ain't one. Let's bring up
Jen.
I just popped a chart up, and I've actually been charting this on the 4 hour, but I just moved into the 1 hour to see if I was getting any trend precognition signals. I'll show you what I like there in a second, but on the 4 hours where I started looking for consolidations, because as you guys know, I like those higher time frames. I look at the daily and the weekly a lot, but we just weren't seeing anything in those higher time frames. We just were not seeing any real structure into the chart, right? I mean, this is from election day, and so we needed these landing zones, and I could spot them on the 4 hour chart. And so we had a little bit of consolidation here in this range between 86.6 and 91.6. And we just got a support test. Last night when we were up here, I posted, this does not feel like a valid support test. It hasn't hit anything that is that remotely resembles a prior consolidation range or a potential RS flip zone. So at the moment, and I'm going to say at the moment, this is trying to establish an RS flip here at 91.6. Okay. And if we want to count wicks, we could say 91.4. That's the same $200 we're going to split hairs about over being near 100K, right?
That's a big difference, though.
So what I was looking at here before we got on the stream, on the 1 hour time frame, something that I like with our trend precognition indicator is I adjust this thing. This thing's really designed for higher time frames, but I've been working with it for a long time, and I've found something that I do like on shorter time frames, and I'll take it down to about an hour. And I like the VWAP. So what I look for now is a long signal to appear and price to break above this VWAP. That's the pink line that I have here, and that's an indication that things might start to go. At the moment, things cleared out. All the liquidity that cleared out on that move down makes it easier for things to move back up, right? We came down, we cleared all this out, and then there was nothing here. So these blocks literally just appeared. These are kind of showing up as icebergs now. And so, a few days ago and from last week, I guess, we had seen obviously a lot of liquidity up here in the range, 100K. And this got massive, right? I mean, at one point, 250 million just at that level. If I take it to a higher time frame, it's upwards of 300 million, 312 million. And that's, historically the most volume we've seen at one single level. And we've discussed this before. Price tends to revert from those huge concentrations unless there's some support down below. And as you can see, there wasn't a whole lot, at least relative to 312 million. There wasn't a lot below. If I push the contrast, you can see we actually do have liquidity down there. Just, from a scaling perspective, it gets outshined by what's up here. And so I wanted to see this and expected to see this correction, but we had a big block of liquidity, about 180 million, that was removed from up here. And what I think was happening, I think this was set here to lure in some shorts, and then it was pulled to lure in some longs, and then the weekend ended. We also knew that as we approached the weekend, the ETF faucet was going to turn off, and that creates an opportunity for price to dip. And then over the weekend, there was all the talk about Michael Saylor coming in with another, 3 billion, something like that, to buy, which happened. So there was speculation that price was going to shoot up. Well, he bought, but he's not making market orders. Those are over-the-counter purchases, right? So that money came into the market, and somebody has to sell him that, right? So we get some volatility out of that, and now price trying to recover from this support down here. And as we often say, liquidity equals sentiment. Here's where the sentiment is right now. And so if we move back into lower time frames, we can see it's not, there's not a ton here, right? There's a nice ladder that goes down, but there's not a ton here. And some of these positions have actually shifted down a little bit. So to have some more confidence in this move, in this little rebound here, I want to see more bids coming up in above this 90K. We could still range here, and we could range here for some time. I mean, we're coming off of a 6-month consolidation in that 50 to 73 range. So what's a little bit more consolidation? I mean, this is a time of year where we often see things pumping across the market. And so, when do we get this 100K? Is it going to happen after Thanksgiving? Is it going to happen Christmas? Remember, last Christmas was like the day things started to take off. Or will it be around inauguration? Or will Inauguration Day be that sell the news event? Kind of what I'm thinking. I'm thinking all this hype is about Trump coming in and all the things that he's going to do that are supposedly going to be good for the markets. And then once those tariffs, start coming in, oh, hey, that's not so good for us. We'll see it come back down. That, of course, a little bit speculative. That's why I like to make decisions based on the charts, not the speculation.
We are always kind of looking at catalysts and things like that, but considering catalysts and what might, right? But at the end of the day, it's the chart and the liquidity and where that actually is, where you can see, a little bit more
Right.
versus
So if
that
this
speculation,
if
right?
this move does not pan out, right? If this does not hold, right? So
Yeah.
at the moment, it looks like we're RS flipping this 91.6. If we drop back into this range, that wouldn't be the worst thing ever either, right? If we consolidate and build more strength here, if this holds, that's pretty strong. But if not, we come back into this range, and there's some reasons why I think that this is interesting. Obviously, the consolidation down here, the support, a brief bit of consolidation down here at the 76K range. And what makes this interesting to me is for all of you CME gap traders out there, look what we have and look where it is. 78 to 80.6. You get a little bit of an overshoot there and you're in that 76 range where there's actually support. So nothing technical here on the gap in terms of the spot chart, but it's close enough to where we've had a little bit of consolidation that is the potential viable target. And until then, the real support that exists on the chart is that 69K. That's the last legit RS flip on the chart. And so Bitcoin's trying to make a new one right now.
Mark, are you charting this at all? Are you kind of seeing similar to what Keith is? Do you have any?
I can share my screen. I'll just do my entire screen.
Keith, if we don't kind of create that new floor, then you're saying things start to retest. 69 is that floor. Well, not floor, right? But 69 is that.
69 is the last RS flip. It's important because it was the 2021 top. And we spent 6 months consolidating under that range. Actually, years consolidating under that range. But after, after the half or just before the halving, when we made that new all-time high at 73.8, we consolidated back under that range for a good 6 months. So yeah, that's a really important level on the chart. Hopefully we don't go back there, right? Let's build higher. As long as we're above that level and we're above the trend line, I'm feeling good. If we lose that 69K, I would have a little bit more concern about the market. And at that point, I would be looking at the key moving averages. And if we start losing those key moving averages on the higher time frames, then, those are often signs that the early indication that things are breaking down would be losing the 21-day moving average. And, I would say it's more important on the weekly, but look where it is on the weekly. It's right under that 2021 top. So you don't want to see that happen. If we lose that, things are going to get ugly.
Right. Healthy
it's already
is one thing.
It would already be ugly. I think it would already be. I think a lot of people would already consider it ugly if we lost 69K. So, in terms of a macro perspective, two things I'm looking at. I'm looking at this, and I'm also looking at where we are in the range of this cycle. Let me zoom out and let's just look at where we sit on this halving cycle. Okay. First halving, second halving, third halving, fourth halving. This feels kind of early to me. I don't know about you.
Yeah. Okay. Well, Mark, I see that you've got yours up here. Let's see what you're showing us also. Keith, I'm going to bring Mark up here.
Do it.
Okay, let's see.
As always, I defer to Keith's expertise, and I still maintain that having a look at the liquidity is really the only like justified way, I think, to navigate markets. But I do like these kinds of like trend following patterns. And the good news is on the monthly, Bitcoin doesn't look as bad as it did a couple of months ago. And so, as you both know, I really do pay attention to these MACDs. I think that, especially on the monthly time frame, they do give you an indication of where the market's going. And so, when I saw the fast-moving average starting to curl back down, I really did think that this was going to turn over. And you guys know I've been saying this for 6 months, that I wanted to go down and explore these other regions. But it looks like it's, curved back up, and not in a weak way like it did in the, this kind of fake double top that we had in 2021. But this is a pretty commanding surge. It's not all perfect news though. So as of yet, we haven't actually made a new high on the RSI. In fact, this local top is slightly lower on the RSI than it was back here when we had that surge up in March. And so this is typically a bearish divergence pattern. I don't consider this to be anything significant yet, because this price action is still continuing up, and this could pull down for a few weeks and then continue up, and the RSI would continue to move up, and that would be a good indication of continuing trend upwards. And I'm actually pretty confident that's going to happen. But just know that there is a very weak sort of bearish divergence pattern showing up here. On the weekly, it's a little bit more severe, which I suppose isn't too surprising. So again, you can see we have a look back at the local top on the RSI and pick that off the price chart. You can see that we've now rallied quite significantly higher. This is a very a very strong price trend that we've had since the beginning of September. Yes.
Really fast. Your chart is so small that with all of the lines that you've got going, I can't see that very well. And I don't think if anybody's watching on like a mobile. Okay. Thank you. Much better.
Is this better?
It is.
Yeah. So all I'm doing is looking at like where did the price top out before we had a brief pullback, and then what happened after it rallied higher. And then I'm looking at the RSI to see if the RSI agrees with this trend momentum. So generally what you want to see is that when we're making a new high, that the RSI is continuing in an uptrend behind it. And you can see that if we connect these dots here, that the strength index is weakening, but again, it's not particularly strong. Another thing that you can do is check the histograms, and you can see that the MACD is actually going up. So again, it's a very, very weak divergence pattern. So I don't think that there's anything sort of catastrophic on the cards in the near future. But having said that, I do think we will come back and check these moving averages. And again, like as Keith said, these are all hovering around sort of the 68, 69K level, at least on the weekly chart. And so, I wouldn't consider that too much of a pullback, but I agree with Keith that I think that would be heartbreaking for a lot of people.
Yeah.
And I think in the, as Jen said early in the call, there is some interesting stuff happening in the altcoin markets. So for example, this is the Say blockchain, which was launched just earlier this year on their mainnet. You can see that, as with most mainnet launches, it had a pretty nice rise and then a very, devastating capitulation that took a lot of people out. But it had a local bottom back in August, and it's already up, 221% since then, which is actually a pretty commanding rise. And you can see on the MACD, it's still curving around. Like it looks like this still has quite a way to run. We're not even overbought on the RSI, and a lot of alts actually look like this. Litecoin.
Mark, are you saying this?
That Keith...
Go ahead. Sorry, excuse me.
Sorry. Litecoin was one that Keith was talking about as we were chatting before the call, as being, one of the cryptocurrencies that actually has a relatively strong fundamental and real world use case, and that is being used. Like it's actually quite popular as a payment token, and businesses are using it. And it's been, sideways for quite a long time, but you can see that's in this wedge pattern. And if the market conditions are right, these things do tend to break bullish. And Litecoin has a really long way to run. The MACD is still in the negatives, and so it looks like it's been winding up for quite a while. It wouldn't surprise me if this has quite a way to go. And even if you are only a conservative trader and you're not into sort of the mania that usually comes with trading cryptocurrencies, it's really easy to pick targets for this stuff. So even if we don't even get close to this all-time high period or beyond, from where we are today is still like 135%, move before you get to the all-time high. And this is where, like, I think altcoin markets are looking really interesting. This is, I've had the XRP chart up here on, before, and again, I've had this consolidating, wedge pattern.
Look at that! It looks like a unicorn now.
Exactly, right. It broke through this with such momentum, and again on the monthly is not even overbought. This is a massive increase. I think from the bottom of this candle is already 175% increase. And yeah, the RSI looks perfectly normal. I mean, we're almost touching overbought, but it's not even there. And the MACD, if I can zoom up on it, is it really has broken bullish. It's been in this very long capitulation phase, this long accumulation phase, and is doing quite well. And this is typically what we see around this time in the market cycle, I think. We're seeing a lot of like indecision. I want to say indecision. Bitcoin is in a very, very strong uptrend, and I think most people have a very high conviction that it is going to break 100K and is going to put in new all-time highs. But people will disagree on when it will be appropriate for it to do that. And I'm seeing even some of the Bitcoin maximalists that I have in my peer circles are thinking that 100K was coming around a little bit more quickly than they were anticipating, and that makes them nervous. And so it's not like they're taking out massive short positions or something, but they are sort of scalping the Bitcoin markets, which is totally reasonable. And it's like when no one's paying attention to the alts, this is when things like this happen. I didn't even realize that XRP had done this until Jen told me earlier today that the altcoin markets were really starting to rally.
And it is, I mean, it is kind of as drastic as it looks. I mean, that is a big green candle, right? But from where it was, I think it pretty much tripled in price, like 45 cents to like $1.50 or something of the sort, right? So it doesn't just look to be significant.
And it's worth noting that there is a reason for that, right? It's not just a random pump on XRP or ADA. It's that likely getting some a bit of a tailwind from Trump's cabinet picks, who are from XRP and ADA.
Yeah.
You could also
argue that, right? Go ahead, Mark.
Yeah, you could also argue, especially in the case of something like XRP, that it has been under
regulatory scrutiny.
Yeah, exactly. Like it's been through an extremely expensive lawsuit, like the most expensive lawsuit I've ever heard of. And with the Trump administration coming in, looking a little bit more crypto friendly, Gary Gensler just announced that he's stepping out of the SEC.
On
these things are all
day.
looking. Yeah, if there were people that were skeptical that XRP was going to be able to endure through those lawsuits, I think this chart is representing maybe that market participants are feeling a little bit more confident now that Trump has been elected.
Well, it's going to be very interesting to see. Now that we have TradFi adoption really percolating, and some deregulation and clarity to crypto regulation, at least on the horizon, right? Which is something that every single person that has been in crypto has been waiting for since they got in crypto, right? We could say, oh, we don't like regulation. Well, there needs to be some. We certainly don't want overregulation, but there needs to be clarity. And maybe that's coming when this is all said and done. And I wonder if we will start to see um, more fundamentals, quote unquote fundamentals, start to matter, like we mentioned with Litecoin, like XRP was developed to do. Like a lot of coins were developed to do. The bottom line is the vast majority of the tens of thousands of coins out there don't do shit. And so if we can weed out the garbage and let the cream rise to the top and actually have an asset class that does something, and I think that brings some strength. It will also bring some stability, mind you, right? We would lose some of the volatility, I would think, but um, I think that those things would be good for the longer term health of the market.
Yeah, I agree. And when I first got into, like, when I was first interested in cryptocurrency and decentralized finance and blockchains, there was a lot more of this in the culture. Like people were assessing, tokens for their intrinsic value, what it is that you could do with them, or how they accrued value. A good friend of mine, Vasily Sumanov, even built like a periodic table of the different kinds of value that tokens bring, not just to their communities, but to financiers or VCs or whatever. Like it's a very inclusive sort of analysis system. And a lot of that sort of, I think, fell out of vogue over the last couple of years. And I'm not sure if that's just a bear market thing or a sign of the times, with like the Zoomer generation growing up and taking an interest in cryptocurrency, and meme coins and joke tokens taking off and that kind of thing. And I'm not necessarily critical of those things, like I suppose I'm a bit of a financial nihilist at heart. But I do miss, the times where launching a token was like a very serious endeavor and that you had to take it seriously, and, it wasn't a joke. And
And not
I
being
would.
live streamed and all of that. I don't know if you guys saw that. I do really
What?
fast. We do have a
Oh,
comment from Raj again. Yeah, the live streams. We do have
okay.
another comment from Raj. So, Mark, I know that you have the simulator up. I want you to go through this. I see that you've pulled up the synthetics ETH chart. Finish your thought, but I do want to make sure that I have a few minutes to kind of analyze or look at the chart that Raj is requesting that we, take a look at with him.
Sure. Well, I can just do this one quickly. So yeah, I had a couple lined up. We don't have to do all of them. But I just wanted to point out that, there is actually a huge amount of opportunity in altcoin markets for things that are maintaining a relatively stable price versus each other, at least in these kinds of short bursts. And they're not that difficult to find. And so, for example, SNX and ETH over the last, few months. So this is going back just to June. And even if we kind of cut the chart off back in August, I think it was pretty clear where the where the price targets would be. I've drawn them where I think I would have drawn them back in August, and so that's necessarily leaving out the advantage of foresight, of hindsight that you get from how far the market capitulated and how far it rallied and so on. But I think this would have been a pretty sensible level to draw. And so I've set this up with, okay, that's probably too much. I'll just set this up with like 3K. And I'll explain what's happening a little bit on this slide. So we're simulating basically a trading period beginning in May of 2024. And we've charged up this position with just Ethereum tokens based on our biases about how the market was going to develop for the SNX token. And so we've placed bids much the same way that you would in a conventional order book. that's going to be, taken when, people are interested in trading with you at that price. And that's all we're doing with the simulator, is that we're using the actual price chart to simulate, when a market would be interested in taking tokens at a particular price point. But what's interesting and what you should pay attention to here is that as the Ethereum tokens are being taken and you're buying the SNX token from the market, it immediately appears as asking liquidity on the other side. And this means that if the market comes back the other way, you get to clear that gap as a profit. This is, you can think of this as a type of grid trading. It actually is sort of a type of grid trading, but more like the 1980s style of grid trading, not the sort of, Unibot Telegram trader sort of grid trading. But, without incentives, like, so with no liquidity mining or any other, subsidies that a protocol might give you, trading two tokens that I think most people like a lot, over the last few months, has generated a 22% ROI in terms of ETH, and that's significant because ETH over the same time period, I mean, it hasn't pumped as far as like Solana has, for example, and the Solana crew, I think, are having a field day, letting the ETH maximalists know it. But ETH has still, it still has grown, and so to get a 22% ROI on an asset that's appreciating is generally pretty hard to do. And this is showing you exactly, how you could have done it.
Mark, I have
so
another question. Oh, go ahead.
Sure. I was just going to say, with only 15 minutes left, I think we can go to your viewer's question.
Yeah, well, I have a viewer's question. I also have somebody that tweeted at Carbon DeFi with a specific pair as well. So let's give Raj his time. He is asking for us to look at Chainlink.
Okay.
I'd love an analysis on Chainlink. It's been having a breakout moment relative to BTC and ETH. Who knows if it sustains? So we never really know, but let's have a look and see what might be happening here.
Link USD. Okay, so yeah, Link has been in this.
Mark, can you like make that a little bit bigger? Do some more for us.
Sure. Let me put it on the monthly. So yeah, Link has been in a sort of a descending triangle pattern for a little while. So it had an enormous breakout back in 2021 when it got to sort of $51, and it has had a pretty significant candle here, right? So it's already up, to the top of the wick, 68%, this month. And on the RSI, not looking too bad. So again, not overbought, in the middle, which is generally where things are quiet enough that you don't have to panic. And on the MACD is also looking pretty good. So
you're looking at it against USD too, Raj. We're looking at it against. He was saying relative to BTC and ETH specifically.
Okay, let's check it out versus BTC first.
Keith, do you have your chart too? Let's kind of look and see a couple indicators. We'll see what Mark is seeing.
I can look and see. I haven't looked at that one in a long time against BTC.
Okay, versus BTC, it's still in like a very strong downtrend. Yeah, but like that's not, every token is in a downtrend versus BTC these days. So yeah, it's in a very, very strong downtrend. The RSI is completely flat. I don't see anything particularly representing a reversal here, although, so this is the opposite. So on the chart that I drew on Bitcoin for the weekly, one of the things that I pointed out was that it was making a new high, but the RSI wasn't. The opposite of that is to measure the lows. And so when you can see a new low being put in, and it looks like Link has just finished putting in a new low. So the last time it traded this way against BTC was like back in 2019.
He also commented too. He thinks he was mistaken or was mistaken. I think it was more so with BTC and ETH, seeming to break out or breaking out, that Chainlink seems to be having its moment as well.
Oh, okay. So he wanted relative to the others.
Right.
Okay.
So
So
could
you're
have been
back
his,
to
could have been my
Link
mistake the way I
USDT.
interpreted. I think back to Link USDT. Yeah.
Okay, let's check out Link USD. Yeah. So Link USD, it's still in a descending triangle pattern. You can see it's touching the top of it right now. And I've had these trend lines drawn on this chart forever, and so it's interesting to see that this green candle is kind of pausing at exactly where I've drawn this.
Right. Is
But
it right above the trend line
Looks
still, or
right
is it?
above.
yeah, it's just above it. It's coming down to sort of retouch it. So some people will look for what's called a bullish retest. So if something breaks out of a long downtrend like this, you actually kind of expect it to fall back down. We can have a
Yeah.
look at that on a smaller time frame.
It looks like it has,
Broken out,
on a shorter time
come back.
frame, it looks like it's broken out, but it's now pulled back about 15%.
Yeah, let's have a look.
And what were we talking earlier? Solana came back 16%, and now
Right.
they're recovering. Everything kind of off of this morning's Bitcoin retest also seems to be riding that same tide.
Yeah.
Mark,
And just note, like, I don't draw these lines like with super precision. You guys see how clumsy I am with this thing because I don't think that it makes any sense to try and be this precise. But it is interesting, right? But you can see, like, if I took this top to be, a more significant data point. Actually, even then, it's not looking too bad. So this could be a bullish retest. And this is a classic. So this is a, in Candlesticks 101, this green, red, green is a like historically like a trader's favorite pattern to see, like two very big green candles with a small red candle in the middle. So some people really like trading those kinds of very old school candlestick patterns, and this is a very bullish one.
You want to learn a very quick and easy down and dirty way to draw those lines quick and
oh, you mean the magnets to the top of the things?
No. What I like to do
I'm
is
going to pull Keith up for 1 second, Mark, because we have 10 minutes and I want to come back to you, Mark, so you can run a simulation on this for our Twitter community member.
Sure.
Oh,
is
didn't mean that. Sorry.
Can vary from artist to artist, chartist to chartist, right? So what I like to do to try and kind of split the difference is I switch to a line chart, and sometimes even go into a lower time frame to fine tune it, and I can just hit my tops of the lines to draw it, and then go back to candles because everybody likes looking at candles, and that seems to work really, really well. It's really quick and easy. Rather than sit there and wonder, should I include this wick or not include this wick? Just boom, go to the line chart, hit the peaks.
This is when you actually said that you realized you hit the target, not realizing that you had hit a target, right?
Right.
It was a couple weeks ago.
Right.
Or that it had retested.
Right. And so I draw these, this one I just did this one because I haven't been looking at Link. So I drew this while Mark was showing his chart, but this seems pretty accurate. And so this obviously a much lower time frame than Mark was showing us on the monthly. His monthly showed it peaking out, and if we look at the lower time frame, we're seeing it poke out as well. And so this looks like a breakout. It looks like it retested support on that trend line, and now it's cooling off a bit and trying to bounce back from that. So I think the entire market is kind of in a similar situation right now, right? We just had that retest on the Bitcoin chart, and everybody panics. One of the things that drives me crazy about this market, right? It's the minute up only stops, the sky is falling, right?
100%.
They think it's over.
Yes.
And you have to, if I've learned anything in this market, at least from the investment side, is you have to be able to be willing to ride out the volatility. And if you're over leveraged, that's not good for you. and that's a different trading strategy. But as a long, if you're building a position for long term, then you got to be able to deal with the volatility. If you're just trading, then hey, like we said, find the scalps, get in, get out, compound, and repeat. And we can look at the MTF mean reversion app indicator, found that bounce too. And if you have conviction on a coin like this, then dollar cost average your way in and hang on for the ride. If you don't, and you're worried about the market, the stability of the market, you take the scalps, you take them for what they're worth. That's a quick 8% in a few hours.
Exactly.
My bot takes the money and runs.
To you. Takes the money and runs to you.
Yeah. I have no knowledge or conviction about a coin like this. So I'm not like eager to stack it. I look for the setups. So from a swing trading perspective, if I see this move, I like it. If it comes back and retests support, then I would be interested in that. But
where are you seeing support for this right now, Keith?
well, I see support on the trend line.
Uh-huh.
We may not go back there. So, we've got to look and see where else we have any confluence. We have a little bit, where it bounced from actually looks pretty good. You can see a series of tops here. So, just down and dirty.
Now, Mark, while we're drawing
confluence
lines
there.
and stuff, you have lines on carbon now.
Yes, indeed we do.
Show us what you got.
Raj, I hope that answered your question. Thank you so much for tuning in and for, giving us a little bit of what you're looking at and allowing us to kind of look at it with you.
No,
Mark, I'll bring
fun.
you back up really fast. It is always fun. Maybe while you show us this, you can also show us, I'll tell you what this tweet said really fast. Somebody had tweeted, trade idea, long liquidity protocol, short maker. And somebody responded and said, imagine opening a position, liquidity maker position on and tagged carbon. Oh shit, you actually can. So I thought it would be a fun exercise for us to kind of look at, somebody saying this is a great trading idea. And both of these projects, they said, let you borrow stables using your crypto. One is at 110 million market cap. One's at 1.3 billion market cap. So I don't know how far back you are. I think they may be looking more at what is happening in the now.
We can go back to 2023, but yeah, in terms of like what's happening now. So yes, the charting tools on the app have dramatically improved. We used to have a little trading view widget, but now these are fully developed in-house for in view of features and things that we'd like to release in the future.
Nice.
But also just to make trading on carbon feel nicer. So I just pulled up the liquidity maker chart, and where this is pulling our own data from our own backend. And
you can go back as far as you want, Mark.
And yeah, so you can now draw, parallel channels if you think you want to identify a trend line, for example. You've also got, triangles on this thing. So if you wanted to draw something like this, maybe if you thought that this was in sort of a rising wedge pattern or something like that. And yeah, I mean, kudos to the guy that pointed out longing liquidity versus Maker. This is I wish I had discovered this specific pair. I really like both of these projects. I know the liquidity guys from the time I've spent in Switzerland. But yeah, this is actually a really interesting chart to trade because just look at how deep the capitulation is, and then like how bullish liquidity is now versus Maker. And so one of the things that we can do is to sort of now ask that question, like, what if I had decided to start longing liquidity versus Maker? Let's say you're all the way back here in, March of this year, and you saw liquidity bounce off this particular level and then start capitulating down. And so we say, okay, where it came down to, I'm happy to buy liquidity with my Maker tokens below this line, and then when it moves to the upside, I'm going to sell to, let's say, from this little chop region down here up to the peak, which would have been a pretty good guess because it looks like that's exactly where the market ended up going. And so because you're longing liquidity down here, we're not going to put any liquidity into the position, so you don't have to fund it with both tokens.
Is that realistic, Mark, that you would have called that bottom like that?
No, we can go. Let's say. I was just drawing it's like a similar
right there,
head
it's
to
kind
this
of
one.
bouncing, right,
Something
or a
like
little
this.
bit below that.
Yeah, and so let's say we do it with, I don't know, 10 Maker tokens. Maker tokens are pretty pricey, so it's actually a lot of money. But yeah, so we can actually ask the question, how would that long on liquidity versus Maker have gone? And it would have gone very well, and it's important to like pause. And I think, this is one of the things that most people don't tell you on a trading call. But it is frightening sometimes, to be taking a long position as prices are going down. And I know because I'm one of those types of traders, I do buy blood. And, this is, liquidity bleeding to Maker. And, you would have had to withstand a 30% drawdown at the worst, right? That's this peak right here. But if you didn't touch it and you just came back, you didn't even have to wait that long. 5 months later, this position is now 62% up versus Maker, right? This is denominated in the Maker token, and Maker is also, appreciating quite quickly.
So you have to have real conviction. You got to have real conviction, or want to stack a token to ride it out that long when you're dealing with alts.
Or at least have a plan. Like it's okay to enter into something so long as you know when you're going to exit from it.
Right.
I think
Well, actually, you're not holding, because once you get to the red zone, you're selling.
Exactly.
Right?
And so
So
that's your ticket out.
So I've got a question for you, Mark, because one of the concerns among traders and certainly people coming from the centralized world who are thinking about getting into decentralized into DeFi is the amount of liquidity that is available. So when you pull together random pairs, in this case, you have two pairs that you can't trade that on Coinbase, right? You can't trade that pairing on Coinbase or Binance. So how do we know whether there is enough liquidity to support a sizable trade? Are you tracking that? Because there's a lot of places that liquidity could be coming from. So how does the user know? How does the trader know that they're not going to have major slippage?
It's a really good question. I get asked this a lot, and it is something you do need to know about. But rather than as opposed to other DEX systems where you're only exposed to like the TVL that the DEX itself has available, the design of Carbon is to access the liquidity across the entire chain. So as long as your token is liquid somewhere on the chain you're using, then it's going to work out. It does help to use things like DEX Screener and Token Tracker and other tools where you can investigate how liquid these tokens are. But in general, I wouldn't recommend trading something that you don't know well enough to know that it's whether or not it's liquid or illiquid. Like if it's something you just heard an influencer talking about or a KOL or something, probably you don't want to buy that token. But if it's you've been around and you know the project and you've been around the block with it a few times, then you're probably going to be pretty familiar with what its liquidity looks like. And in
So are you
general, that's
suggesting
kind
that
of
people
the
actually do research and not just go on trusted blogs?
This is silly, Mark.
it's such an unpopular opinion, I know.
Mark, I know that you had a hard
It's
stop
so
2
annoying.
minutes ago.
I do indeed. I'm
In
going to
case
have to
you
go. But thank you so
didn't
much for
see,
the
I
call,
will.
you guys.
No,
Uh,
thank you.
it,
And
it's
you
good.
know,
And
to
thanks,
all of
Raj.
the yes, thank you, Raj, and thank you to our community member also, you know, who had tweeted at us or at Carbon DeFi. Mark, I'll let you jump on your call. Keith, I'll let you get back to it. Definitely follow, give Keith and Mark a follow. Follow me and yeah, check out Material Indicators, check out Carbon DeFi, and my DMs are always open. Anybody has any questions? Thank you so much, Keith.
Thank you. Have a happy Thanksgiving. Hope you
Yeah,
get
to all of
to
our viewers, if you're in the US or you're celebrating Thanksgiving, have an amazing Thanksgiving. I hope you have an extended weekend and enjoy your days. Thanks, Keith.
absolutely.
Happy Thanksgiving.
You too. Thank you.
Thank you. We'll see ya.
All right. Cheers.
Cheers.